Hey, today we're learning about how transactions change the owner's equity and accounting equations. So we're focused in on that last category. And like I said yesterday, there is a lot that goes into the owner's equity. That's where you're looking at some of the expenses, you're looking at the revenue that's coming in, you're looking at your investments, and you're looking at your paycheck, your withdrawals. So we will increase the equity from sales, from goods or services, the revenue. And we will also be a sale, which is also done on account. And on account means that someone has said, I will pay you later, like on a credit card, but this isn't actually a credit card. They're just a tab with the business. So let's look at the first transaction. We're looking at January 10th. We received $1,100 from sales. So when we have that cash from sales, it's going to increase our cash. And so if we started off at $835, we increase it. We now have $1,935. It is going to increase our owner's equity. Our capital account is another name for owner's equity. So Michael Delgado Capital is also going to increase by $1,100. And that increased is because of revenue. Another thing that could have happened is if you sold services on account. So sold services on account is going to go to accounts receivable. This is when someone owes us money. So accounts receivable is when we are owed money. And again, this is going to be revenue. And so if we were to check it out and make sure that we have everything accurate, we're going to add up and make sure that our columns stay accurate each time. So we're going to do new balances. 1,935 plus nothing is 1,935. 0 plus 500 is 500. 380 plus nothing is 385. 900 plus nothing is 900. So that's what our when it says new balance line, that's what it's asking you to do. Now to check to make sure we haven't made any mistakes, we total the left-hand side, so we add all four of those columns together, and we end up with $3,720. We total the right-hand side, we end up with, again, $3,720. When you do 3,600 plus 120, you end up with $3,700, or $3,720, $3,720. So now, that was things that was coming in. Now we're looking at the expenses, things that are going out, things that we have to pay for. So we pay cash for the communications bill for the cell phone and internet services at $80. So that was an expense. That's going to lower your cash by $80. It is also going to lower your capital by $80, and that is now an expense. And again, if we total the left-hand and right-hand sides, at this point, we keep adding up our little columns, keeping them running a total, and we add together our left-hand side. It equals 3640, and add together our right-hand side, and that's equal to 3640 as well. So the next expense transaction is we pay cash. So cash is important. It tells us it's going to be changing our cash account for equipment rental. So that's an expense. So we are going to lower our equity by 400 and lower our cash by 400. And again, we're going to total up what happened. So we've subtracted 400 here. We're now at 1455, and we're now at 3120. And so again, totaling the right-hand side and totaling the left-hand side, that's a check. And when you check it, that's what you end up with. Assets taken out of the business are called, for their personal use, are called withdrawals. This is typically if you're wanting to do a paycheck. If you're wanting to get paid from your business, you're taking a withdrawal. So On January 16th, we received cash on account from Main Street Services for $200. So they have paid us some of the money they owe us. And so they owed us $500. They've paid $200 of it. So they still owe $300. And our cash has increased by $200, so we're at $1,655. Now, when it's on the same side of the equation, you're going to have the opposite signs. This happens most commonly when you're dealing with assets and then let's go on to our next transaction. So on the 16th, Michael Delgado withdrew $350 to give himself a little bit of a paycheck. So we're going to deduct from the cash because cash is leaving. So we need to lower it by $350. And we need to lower our capital by $350. And this is a withdrawal. So we've had expenses, withdrawals, and revenue happen in owner's equity. So looking just at our owner's equity column, revenue from cash, we got $1,100. Then we had revenue on account for $500. Then we spent some money for our cell phone bill, and we spent money for our equipment rental, and then we paid ourselves. So we would subtract the bottom three from our total up at top, and you're left with $770. So I want you to answer this. How is owner's equity affected when cash is received from sales? It is increased. How is owner's equity affected when services are sold on account? It is increased. And how is owner's equity affected when cash is paid for expenses? It is decreased. Now let's go into our on your own problem. And something I want to show you, because starting to get here, we're going to start getting into more and more detailed problems. This pen up here, you can click it and move it around. And resize the shape of the box. Now, I can't remember which corner. There's a corner. You can resize the shape of the box. And so you can have it hang out over here, so it's easier for you to move up and down. And so we're going to go through and type in, and all it's wanting us to do is enter a plus sign in the column if it's increased, a minus sign in the column if it's decreased, and both a plus and a minus sign can be entered if we need to. Now, on your application problem on owner's equity, it's going to have a second little spot, and you'll mark it as an expense and a revenue or a withdrawal. So let's look at the first one. First transaction, we received cash from sales. So our cash increased, and so did our capital. Then we have sold services on account. So on account is where they owe us. That is an asset. And another thing to look for is look who it is. Harmon Co. And so if we sold services on account, they have increased their tab with us, so that's a plus. Now, that also increased our capital. We paid cash for a cell phone bill. Cell phone bill is an expense, and we paid cash. So that means cash came out of our bank account. Bank account, remember, is the cash column. And so we withdrew from there. And we got to keep it balanced, so when we go over to owner's equity, it is a negative, or a subtraction. We received cash on account from Harmon Co. So they paid off some of their debt. And, oops, I've gotten the wrong line there. Let me get it down to the right one. They paid off some of their debt, but we also received cash. So we've already credited the cell up here. So we don't have to credit the cell again. We're staying over on the left-hand side, And we're dealing with our bank account went up, their bill went down. Owner withdrew equity in the form of cash. So cash, again, means we're dealing with our bank account. So our bank account is going to go down because we withdrew, but we're also lowering our capital because we've taken some of that money that we've invested in out and we're using it for personal use. So that's a withdrawal. So that would be a minus there. So you should have a minus in the cash and a minus in the capital account. Save and continue. So for your rest of your assignment, you'll do the on your own part, and then you'll go back and you will do the application problem 1-3 as well.